Hello everyone, this is Lisa of Lisa Guevara Online Bookkeeping. So today we'll be continuing our lesson on accounting basics. We are going to take up today the accounting equation. So after this lesson, you'll be able to know and understand what is the accounting equation and its relation to the double entry bookkeeping system and the balance sheet. So what is the accounting equation? It is also known as the basic accounting equation or the balance sheet equation. So it is expressed as assets equals liabilities plus owner's equity or capital. Okay, so it is expressed as assets equals liabilities plus owner's equity. This is the fundamental concept in accounting that represents the relationship between the company's assets, liabilities, and owner's equity or the capital. It also provides the foundation for the double entry bookkeeping. The double entry bookkeeping says that every transactions affects at least two accounts. So we have said that the accounting equation is assets equals liabilities plus capital. Since this is an equation, if for example capital is unknown, you can know how much is the capital by uh, subtracting the liabilities from your assets. So capital is equals to assets minus liabilities. So another way of looking at the equation is, for example, liabilities is unknown. You should subtract the capital from the assets, so you will have your liabilities. So since this is an equation, you can derive uh, what is the unknown from these three items. So what are the three elements in the accounting equation? So we have said that the accounting equation is composed of assets, liabilities, and capital. So these are the three elements of the accounting equation. So assets is the economic resources owned or controlled by a business that have future economic value. They can be tangible or intangible. Tangible assets are those which can be touched, which has physical, which is physical in nature. For example, cash, property, and equipment or inventory. Intangible assets are those that cannot be touched. Examples are accounts receivable or intellectual property. So, in other words, assets are those uh, which the company owns and uses to generate revenue. So, next we have liabilities. These are obligations or debts that a company owes to external parties. These external parties can be creditors, suppliers, or lenders. They include loans, accounts payables, accrued expenses, or long-term debt. So in other words, liabilities represent what the company owes to others. And lastly, we have the owner's equity. This is also known as the shareholder's equity or capital or owner's equity. This represents the residual interest in the assets of a business after deducting liabilities. So this is capital equals assets minus liabilities is your owner's equity. Your shareholders or owner's claim is equal to the initial investment plus retained earnings plus the additional contribution made by the shareholder or the owner of the business. So next we are going to know what is the double entry bookkeeping system. This is an accounting method where each transaction is recorded in two or more accounts using debits and credits. So the accounts affected can be an asset, a liability, or a capital account or owner's equity account. So for example, you opened your medical practice on May 1, 2023, and you invested your savings to it in the amount of 100,000. So upon investment, you will increase your cash of 100,000 and your capital. So these are the accounts which will be affected by investing your money to your business. Increase in cash and increase in capital. Next example, for example, you got a loan in your local bank in the amount of 300,000 for your business. So once you get the loan, the bank will give you money, so your asset will increase in the form of cash, and your loan will also increase in the equal amount of 300,000. So next example, for example, in the month of May, you saw 35 patients and they paid you 52,500 in cash. So once you receive the cash, your assets will increase and your revenue, which is under capital, will also increase. Another example is, for example, you pay the following expenses for the month of May. So you have rent for your office, salary, office supplies, and utilities and medical supplies. So once you paid, there is a cash outflow. So your cash will decrease and your capital will decrease because your expenses will decrease your revenue. Okay, so the double entry bookkeeping system will always affect at least two of these elements: the assets, liabilities, and capital or owner's equity. So the accounting equation must always be in balance. This means that the total value of the assets must be equal to the combined value of liabilities minus owner's equity. Liabilities and owner's equity. So our accounting equation is assets equals liabilities plus capital. This portion and this portion must always be equal. So for example, this one is 100,000. This part, the combination of liabilities and capital, must also be 100,000. Okay. So it follows the principle that every transaction has a dual effect impacting both sides of the equation to maintain the balance. Okay, so let's discuss about the balance sheet. So the balance sheet is a more detailed and complex display of the accounting equation. It shows the total assets, total liabilities, and shareholders' equity. So in other words, all uses of capital, the assets, are equal to all sources of capital. The debt, which is the liabilities, and the owner's equity. Okay, so next we are going to create our balance sheet based on the examples that we have seen a while ago. So let's do that. Okay, so now we'll take a look at how the following transactions, this one, will affect our accounting equation, and we will make the balance sheet afterwards. So this is our accounting equation. We have assets equals liabilities plus capital or owner's equity. So our first transaction is you open your medical practice on May 1, 2023 and invested your savings in the amount of 100,000. So we will debit cash in the amount of 100,000. Cash is an asset. And we will credit capital in the amount of 100,000 also. Next, we have you got a loan in your local bank in the amount of 300,000. So once you receive the proceeds, we will debit cash of 300,000 and credit loans payable of 300,000. The next transaction is you saw 35 patients on the month of May and they paid you 52,000 cash. So let's record cash, debit cash of 52,500 and credit revenue. Revenue is under capital account 52,500. And the fourth transactions is you pay the following expenses for the month of May. So we have rent of 750, salaries of 12,500, office supplies of 1,000, utilities of 550, and medical supplies of 15,000. So that is a total of 29,800. Since you paid that in cash, we will credit cash. It will be a deduction in your cash in the amount of 29,800. So let's add the total of the following. Let me get my so your liability is 300,000. Okay, so your capital is 100,000 plus 52,500 minus 29,800. So that would be 122,700. So adding that to your liability, so your asset should equal to 422,000, so 700. So let's add your asset 100,000 plus 300,000 plus 52,500 minus 29,800. So that is 422,700. So remember that your assets should always equal to your liabilities plus your capital or owner's equity. Okay, so we are going to continue preparing our balance sheet. But before that, before we can prepare our balance sheet, we have to prepare first our income statement. So basically, these are revenue less expenses equals net income. So our revenue is, okay, so our revenue is this one, 52,500, and these are our expenses. Okay, so our revenue is 52,500. Our expenses are rent in the amount of 750, salaries in the amount of 12,500, office supplies of 1,000, utilities of 550, and medical supplies in the amount of 15,000. So this is a total of 29,800. So if we subtract that from our revenue, we'll have a net income of 22,700. So now we are going to prepare our balance sheet. Okay, so let's prepare our balance sheet here. Okay, so balance sheet. As of, that would be May 30, 2023. For example, so we have assets. The only assets that we have is cash in the amount of 422,700. So that would be our total assets. And now we'll be preparing our liabilities here. We have loans payable of 300,000 and owner's equity we have the initial investment or capital. Initial investment of 100,000 and our net income, the one we computed from our income statement, this will go here. So that would be 22,700. Okay, so our total capital or owner's equity is 122,700. So our total liabilities and capital is 300 plus 122 is 422,700. So this is our balance sheet. So as you can see, the accounting equation is assets is equals to liabilities plus capital. This is the vertical version of the balance sheet is the vertical version of the accounting equation, the balance sheet that we prepared. We can also prepare the balance sheet horizontally following the accounting equation. So that is all about accounting equation and its relationship to the double entry bookkeeping system and the balance sheet. So see you on our next video.